welcome back to Infinity Wealth. Dr. Marttand Patel here. Okay, so in this third part of this three-part video series, what I wanted to talk to you about is the overall economy, how it's going to affect property prices, and what to look for. Now, first of all, we all know that interest rates have been reduced to 0.1. We believe that it will probably go lower. They are talking about negative interest rates around the world. I personally hope not, but that remains to be seen. But if we look at the overall economy, now, how is the coronavirus going to affect the overall economy? First of all, a lot of people are going to be made redundant. Or they're going to be laid off, especially in the service sector. You're hearing it all from from the US, where people are asked, restaurants are closing, so people are asked not to come into work. Now, some of these are going to be paid leave if it's a large company they're working for. If it's a smaller organisation, they will not be able to afford it, so they'll just probably lay that staff off, and that staff obviously will be struggling to make ends meet. And as landlords, we need to ensure that we try to support all our tenants as much as we can, where it is possible to support them and they're genuine, because we are, like I said in my last video, we are experiencing people who are just trying to beat the system by asking for rent reductions when they don't need rent reductions. Okay, so if we look at the economy, first of all, prior to the COVID-19 virus coming into play, we had Brexit also in play, so the economy was slowing. Now, if you look at what London house prices have been doing, we did get a Boris bounce, did shoot up. The US have just recently released their home sales figures today. It's Friday. And those home sales shot through the roof. Now, this is prior to COVID-19, and the main reason why they shot through the roof was because bond rates have reduced so much, which means that you can lock in a 5-year, a 10-year mortgage plan at a very good rate. So what you should take advantage of is, with these low-level interest rates, you should take advantage, if you can, to finance your properties at a lower rate. As far as the economy is concerned, it's not looking, there's not a rosy picture. At the end of the day, what's happening in the stock market, if you look, it's taken a dramatic dive. Now, I've had lots of calls saying, well, should I short the FTSE? Should I do this? It's too late. It's already happened. There will be a bounce from these levels in the FTSE, only in the hope. But really, we won't know what is going on until at least 2 or 3 months down the line. Now, it could be that because of the amount of liquidity that's pumped into the system, it's enormous compared to 2008. If you can remember back to the financial crisis, it's dwarfed that. So, the amount of liquidity and money sloshing around in the system is huge. So, if we do beat the COVID-19, I don't anticipate us we'll have a recession without a doubt, but I don't know the duration of it. But judging by the amount of liquidity that's pumped into the system, it could be that there's a rebound. Now, there is a caveat to that. The caveat to that is, if you've ever followed me or giving talks in various property events, talking about the amount of debt that governments are carrying, that is the main caveat. There is a huge amount of debt by all Western countries and around the world. Also, corporate debt is at the highest level that it's ever been. So these are the dangers within the economy, that can these corporates afford to service their debt? The US has already said, well, look, we will buy your debt. In theory, they're actually buying, the central banks are actually becoming the last lender of all resorts, but at the end of the day, they're acquiring assets. By buying that debt, they are acquiring assets. So there is a lot of contagion in the market where people are saying, well, hang on a minute, central banks are owning everything. Yeah, that is coming. Unfortunately, that is coming. Now, with the as far as property is concerned, because interest rates are so low, people are still going to continue investing in property at this moment in time. If you think about it, if people can't make their rent payments, what's going to happen is that investors are going to shy off actually investing in property. I'm a great believer that when people are scared, it's the best time for you to be the bravest you can be. Now, that hasn't completely materialized, and I think that will happen in the next few months, where people are just going to stop buying property, and you may be able to pick up good bargains within the property industry. Especially, if you're looking to purchase something at the moment, I would say hold your horses, make offers lower than you would have normally, to see if they will accept those offers. But don't be doing going in like a raging bull. It's time to be cautious but optimistic, and that's what I would phrase: cautious but optimistic. So if you can't, timing, basically, the property market is always difficult. But if you look at 2008, the stock market came down, and what we found was that it took a long time for the property market to follow. It did follow in the end, and then there was the upturn. So if you look at house builders and all the other share prices, they've been hit. If you look at British Land, which is a large landowner, but also they have a lot of commercial property. Judging by their share price, you can see the strain in the system, where landlords who are commercial landlords will also be finding it quite difficult because their rents are not met. Offices may be saying, well, actually, we want a holiday on paying the rents because none of our staff are there. And it's working with people. I think in these sort of times, it's actually working sensibly with people to understand what their needs are, and then trying to come to a resolution on how you can help them, and both together we can come through this. So that is the positive take from all this. The other thing that I've been quite adamant on is gold and also silver. I am a strong advocate of gold and silver. The main reason why is the amount of money printing that's going on. What is your pound note worth? When the governments are stimulating and just printing money out of thin air, what does that mean to the money that we have in our bank accounts and in our wallets? Asset prices like stock markets and property has gone up because of that liquidity. But at the end of the day, it's also worthwhile considering other avenues of investment, especially when interest rates go zero. If interest rates go negative, then banks will charge you money to actually hold your money. In these sort of situations, holding assets such as gold, which has always been money throughout decades, will maybe a better worthwhile investment to make. Anyway, so I hope that's been useful to you. Once again, please don't forget to like our Facebook page, like our YouTube channel, and also below you will see links. So if you want to send us an email as well, it's info@infinitywealth.me. We'll be more than happy to answer any of your questions and also provide you other bits of information. Okay, take care, guys. I hope you've enjoyed this update, and I'll speak to you soon. Bye.